Walmart just came out recently and said they may have to start raising some prices because of some tariff issues. So, I think we're still in the middle of this. I think we did a show previously and we said, we're probably not in the third inning of this. We were in the bottom of the first or the second. And then now we're probably, kind of maybe in the middle of the game here.
Well, it's not about timing the market, it's about time in the market. And when there are bad days, good days are often right around the corner. So, how do you know how to have that long term approach with your investments? We'll talk with Chris McIntire today on your game plan for retirement. Always a resource for information, sound advice, and guidance on your money, your investments, and your retirement planning. President and founder of McIntire Retirement Services. He is Northwestern Ohio's resource for a common sense approach to planning. And Chris, we always appreciate your time, your guidance, and insight. So, a little bit of tariff relief seems to be in the news and buoying the markets recently.
Yeah, we've had a nice little recovery here for sure, and that makes investors feel better, puts everybody a little bit at ease here that, what do they call it? Liberation Day was certainly liberated the prices of stocks to decline. And
Sure
uh,
did.
yeah, and then they came back with some, that 90-day relief and in the latter part of April there. And that certainly has helped buoy the market up pretty good. And then also some additional agreement so far, probably just in pencil, maybe not in ink with the United Kingdom. Some issues going there with China on, probably some sort of agreement that's going to come down the road, more solidified. And then the president has had I would call it a successful visit over to the Middle East there, from trade aspect. And, heck, even people on the other side of the aisle are saying, wasn't a bad meeting there that he had. He got some things constructively done. And, maybe we should elect more business people instead of politicians to run our lives.
Chris, you and I talked as this whole thing kind of got started that China probably would be the one that played hardball a little bit with us, more so than maybe some other more strategic alliances, if you will. But even they have seemed to warm up and thaw those cold conversations a little bit, be more open to negotiations here. I guess it's a win-win for everyone when we can trade more freely or fairly.
Yeah, yeah, without a question. And I think finally, the President Trump, said, look, we've got some really bad business deals out there. Let's deal with them. That you got to think that's going to be okay over time. And, we might have some short-term pain. We just spent, my wife and I, 2 weeks in Scotland and talked to all kinds of local shop owners and all that, people on the, boots on the ground, if you will. We talked to the soldiers, not the generals. And all the soldiers are like, hey, why do you think the United Kingdom left the European Union? It was some of the things that they had going on there that was, disadvantages and whatnot. So, I'm optimistic that better things are coming here for the United States. Certainly looks like more and more dollars will be flowing in here. It's going to take time. You don't build a factory or dig a mine immediately by any stretch, but that's still good news that'll come down the road. And I bet you there'll be other politicians will be happy to take credit for something they had nothing to do with.
Well, it's interesting going across the waters and getting the perspective from the other side from folks who have sort of been through some similarities in those situations before, maybe have a little empathy or understanding, having had to deal with leaving the EU there, that Brexit. I remember that was big news on the geopolitical and on the financial stage while that was happening or being considered and then finally being executed. And kind of like with all big news, Chris, it seems like the market is very reactionary immediately and then sort of says, hey, life is going to go on. Well, trade is going to go on. The economy is going to go on and adjusts and just levels out to whatever the new reality of the situation is. And I think that is what happened here with these tariff conversations. And then as negotiations actually came to fruition, it said, hey, actually, maybe this is looking like a more positive thing than the immediate reaction sort of thought or proposed might be the case.
Sure. Yeah. And on the other side of the conversation here is, Walmart just came out recently and said they may have to start raising some prices because of some tariff issues. So, I think we're still in the middle of this. I think we did a show previously and we said, we're probably not in the third inning of this. We were in the bottom of the first or the second. And then now we're probably, kind of maybe in the middle of the game here. I don't think we're at the seventh inning stretch by any stretch of the imagination. Not no pun on words there, but I think it'll be an interesting summer to see how the dynamics of this play out. And we would certainly think, we're probably going to have some more volatility as certain news, the headlines drive some of the market behavior right now.
I can't necessarily say that Walmart breaks my heart, but I know mom and pops and small businesses also depend on trade and goods that are not manufactured here domestically would potentially be impacted and affected. And then Walmart, kind of the great competitor with all of those small businesses, sort of sucks up and vacuums those. But Chris, we will see how this plays out. The bottom line is long-term planning is the key. You don't look at one day in the market or one week in the market. You look out 5, 10, 15, 50 years in the future. And that's what investing is. And I know that you are a big proponent that most of the people that you talk to, probably most of the listeners of this program, are good savers and investors and have probably taken good care of a couple areas in their financial life, in income, investments, taxes, healthcare, legacy. If they're still worried about some areas, it's probably an indicator that they do not have a complete plan, that they have done a good job in a couple areas, have accounts, have investments, have savings, but maybe not completed the plan. If they're worried about inflation or healthcare expenses in the future, or how income and taxation are going to work in retirement. And that's why you offer to put together that game plan for retirement, really bringing all of those pieces together, and a long-term outlook with diversified strategies personalized to somebody's individual situation. That is planning, ladies and gentlemen. And if you would like to get your game plan put together, pick up the phone, give a call, 419-332-0532, 419-332-0532, 419-332-0532. Chris, did you see that folks that were more reactionary to that downturn in the market in early to mid-April may be an indicator that the plan was not flushed out and really completed, that they didn't have that long-term outlook?
Well, and I think they were probably driven by the emotion of the headlines and whatnot. And, look, let's be honest, everybody, is going to get nervous when the market takes a very quick 10, 12, 15% drop. That's very understandable. But like you said to start the show, look, it's not about timing it. It's about the time you spend in it. It's about having a portfolio that's suited to your overall risk tolerance. And sometimes that risk comes on quick, like we've demonstrated. And then I think, the market's basically flat or maybe even just a little bit ahead of where it was to start the year. It's about 11% ahead of where it was a year ago. So, all things being relative, and, most of us have a pretty short-term memory. What was the balance on my last month's statement? A year ago, it could, you could be 10% above where you were a year ago, but if your value went down over the last month, nobody's looking back the 12 months to say, hey, you know what, we're still up pretty significantly. And that's just human nature, right? We're statement driven, not necessarily, long-term logical decision-making processes. Engineers are the exception.
If we were a little nervous, though, if we were worried, if we were holding our breath when the market went down and now it's back up, so we take a sigh of relief. What now? Do we now just let it ride, or was that momentary nervousness when we did see the volatility an indicator that we should take a look at planning?
Yeah, no question about it, because, when the market goes up 2 years in a row, 2023, 2024, your real risk tolerance might not be, or your perceived risk tolerance when the market's going up might not be the real risk tolerance when when you get that sudden shock to the system, if you will. And look, Peter, part of our job is to be a psychologist and help coach people through this and talk them off this, from jumping off the bridge, if so to speak, and say, look, put me in cash. We'll figure this out later. It's like, all right, but all of a sudden the market runs up 12% and you're sitting in cash and you missed all of that.
Does the emotional aspect of the market get in the way of good planning, Chris?
Absolutely. 100, not 100% of the time, but man, it is one of the biggest drivers is, the 30-second headlines. And, I put out many client emails saying, look, when the market's green, the flashing headline is bull market. When it's, got a red day, bear market, market crash or something like that. It's like, that stuff drives me crazy. And, sometimes those are the days you turn it off and you go take a walk and be thankful you've got good health or whatever you're thankful for. And
Absolutely. Well, again, ladies and gentlemen, if you had pause, a nervousness, worry about the market, maybe you still do. Maybe that has passed because the market has rebounded nicely since the initial announcement of these tariffs. However, if you had that and want to move forward with lasting financial confidence, live life retired confidently, that takes work while we're working. That takes careful planning and strategies to maintain it once we are retired. If you'd like to learn what those are, if you'd like to cover all of the critical areas of planning, have a written plan that documents your approach to each. Pick up the phone, request that game plan for retirement. Have a conversation with Chris and the team members from McIntire Retirement Services. Set up a time convenient for you to visit with Chris and go over your goals, your expectations, what you would like your life and your money to look like into the future, and then document a plan that addresses the steps on how to get there. 419-332-0532. There is no cost, there is no obligation to having those conversations and to getting your game plan for retirement put together, by the way. So no cost there. Leave the checkbook at home and have that conversation. See if everything is covered and you should feel confident, or if there are areas that you could address, or even some easily, some more complicated to improve upon in your financial outlook. Again, that's the game plan for retirement. Chris McIntire will lead you through it. An experienced, qualified professional who has seen retirement many times over, seen what has worked, what has not worked so well. 419-332-0532. Chris McIntire there to lead you in the right direction. Be that financial offensive and defensive strategist. Chris, defensive strategist, you do have strategies available to help minimize volatility and losses, correct?
yeah, absolutely. And we have, completely safe investments from any market loss potential at all, like your bank CDs, for example, but we use money markets, fixed annuities, index annuities, where you don't have any downside potential, whatsoever when the market tanks. And, that gives a lot of people sleep insurance, if you will, or, some sort of peace of mind. Everybody's got different degrees of risk tolerance. I have some clients that are incredibly conservative and some that are incredibly aggressive, and then everything in between. So we can, kind of tailor our strategies around that overall risk tolerance and then give them options to help them make the best decisions possible. And that's the nice thing, working on the fiduciary side is, you really got a vested interest in helping the clients and helping people in general is kind of why most of us get in this industry. We do want to help people. The craziness is we deal, when you're talking about investments, you're dealing with things that vary in value, daily based off of geopolitical, headlines, elections, combat, our conflicts, I mean, and then, obviously the economic underlyings, the raising of interest rates, cutting of interest rates. There are a lot of factors out there. And then, tariffs would certainly fit into that as well. So, helping people manage through the emotional side of, dealing with uncertainty is probably a big part of what we do.
So helping people to reduce the risk, to de-risk, to have those more defensive strategies, and then on the offensive side, Chris, we know that you have access to the full spectrum of the market. You've got those more growth-oriented options available. So should the offensive strategies and the defensive strategies be within the same strategy? Like we hear about this asset allocation and diversification and this 60-40 mix of stocks and bonds. Does that approach still make sense within a portfolio, or are the goals of money better achieved if we differentiate the planning approach? Does that
Yeah, that
make sense?
yeah, I think what you're saying, that traditional 60-40, 60% stocks, 40% bonds, or vice versa. But there are other asset classes you can look at now. Some people like cryptocurrency as a hedge. Some people want gold as a hedge. Some people want, just a completely safe element to their overall portfolio, and that wouldn't be a 60-40 portfolio. So they may say, look, carve off $200,000 and park it over here in something I can't lose anything in. This is my insurance money. I may not need it immediately, but I want to have it available, for down the road items. And obviously we all keep our emergency fund, kind of the Dave Ramsey side of things, and it's look keeping 3 to 6 months needed for emergencies. There are other safe strategies that can deliver you a little bit better than a bank savings account, for example. But there's nothing wrong with having that cash supply at the local bank that's very quick and easy to get. And some of you have cash probably at home or in a gun safe or something along those lines as well. And that's okay too.
But to personalize those strategies and make sure you've got the offensive and defensive strategies in alignment and congruent and complementary working together, that's what the game plan for retirement is all about, ladies and gentlemen, and dealing with and enlisting the assistance of an experienced qualified professional shown to provide benefit. So give a call to McIntire Retirement Services and Chris McIntire to get your game plan for retirement put together. 419-332-0532, 419-332-0532. Chris, I think we all probably have a list, some maybe larger than others. Mine probably a book of things that we could look back on and say, hey, didn't do that one so well. That one was maybe a mistake. When it comes to our money, do wealthier people have costlier mistakes? I mean, you mentioned money sitting idle in savings accounts. If that's $10,000, maybe not that costly a mistake. If that's like $100,000, doesn't the cost of any mistake, not just cash, but any mistake kind of multiply as the wealth of value increases?
Yeah, without a doubt, Peter. And, you bring up some of those examples, and I can think of specific circumstances, and I've told folks that, why do you have 100,000 sitting in a savings account? A money market's paying about 4%. That savings account's probably paying, 0.5. I mean, those are significant dollars over the course of time. And, you could say, wealthier folks, are they taking too much risk in a portfolio? Are they really outlined? Because, if you're looking at drawing income off of an investment portfolio, that's where the diversification really helps you. Because if you're 100% invested in stocks within the S&P 500, for example, well, man, that can fall 30%. And if you're pulling dollars out of it, it's hard to get that back. Where if you're in a little more of a diversified portfolio, stocks and bonds and some other safe vehicles, you're not going to have that huge drawdown risk as you're pulling money out of it. So, pretty interesting dynamics that we all have to deal with in this crazy thing we call investments.
Yeah. Again, helping you navigate that and strike the proper, appropriate, personalized balance for you. Chris McIntire, president and founder of McIntire Retirement Services. If you'd like to get your game plan for retirement put together, 419-332-0532, 419-332-0532. Everybody wants their money working effectively, Chris. I mean, the end goal, right? As much income as possible with as little tax as possible. Those two don't always go hand in hand, though. And I know taxes are kind of an ongoing issue. good problem to have. I've heard it called, but I still hear the word problem. As we are making financial decisions, the tax implications can never be ignored.
No, they cannot because most of, our retirees' money nowadays is in a 401k or an IRA with pre-tax contributions, so pulling money out of that has very big ramifications. And it's not uncommon these days to see a million, $2 million in IRA accounts.
Yeah, it
You go
used to be
back.
your home is your biggest asset. Nowadays, the 401k often far surpasses the value of even our homes.
Absolutely. And, as you know, pulling big dollars out of that can create additional tax problems, not just income tax, Medicare issues, Social Security tax issues, and I mean Medicare premiums. If your income is substantial, your Medicare premiums that come out of your Social Security benefit, can certainly cost more. My wife and I were going to deal with that this year. She turned 65 and is going to go on to Medicare, and we make a decent living, so it's going to be a hell of a lot more than $185 a month. It's going to be more like probably 600 coming
Don't
out of
don't
her
don't,
Social
don't get
Security
yourself in
benefit.
trouble on air, Chris.
Yeah, yeah.
No, well, Robin's doing wonderful for where she is at. We always give her a hard time here on the program, but man, Chris, y'all are doing a great job with your business and personally, and love to hear about your personal life. Y'all recently actually took that trip to Scotland. You mentioned a little bit earlier in the program. Those are the kind of things that people dream about for retirement. Um, you've got to plan effectively in order to be able to achieve those kind of bucket list items. Yes, financially, but you've got to kind of think about those things that you want to do into the future and then began the financial side of the planning.
Yeah, and I'm not afraid to share, my wife had a health issue several years ago, so we live a lot more in the present. And, we've seen a number of our clients retire and then get illnesses. So, trying to get some of those more memorable experiences that take some travel, take some energy and whatnot. In Scotland, if you've ever been over there, you go up and down some hills, and we like to get outside. And you know uh, but related to Scotland, we were talking to people. It's like, do you guys have, what's your form of Social Security? And, they don't have nearly the investment side of things that the United States has.
Hmm.
For them, they work, they get a pension out of the government, typically, kind of similar to Social Security, I would say. But their tax rates over there are, and I can speak of the United Kingdom because I've been there, and also Ireland. Is if income of about $50,000 a year, or 50,000 euros, 50,000 pounds, whatever you want to call it, is about 50%.
Mm.
They have a 20% value added tax. So my wife bought a coat for $400. The tax on it was $80. Now we get to deduct it because we don't have to pay their value added tax, but they have free health care and free college, for 20% of everything you buy.
Hmm.
So if you want to call that free, that's
Get
not
you
my
one way or another,
definition.
right? The different systems for doing it, but things have to be paid for, and the means of
Yep.
collecting those dollars from the large numbers uh, differ from place to place, from country to country. But one way or another, they seem to figure out a way to get it.
Yes.
Chris, appreciate you mentioning the health. That's what I was alluding to with Robin doing so well, and I'm so glad to hear it, and so glad that y'all are taking trips and doing things like that. My wife also with the health scare, I
Yep.
decided a few years ago was important for us to enjoy some life along the way also, but it does take careful planning. Now, you mentioned that the Medicare premiums can be impacted by other income. I feel like that is not something that is really known to people until we actually get there and get whammied by it.
Yeah, absolutely. And I have a little sheet right here. So for the average American that signs up for Medicare, okay, they deduct $185 a month out of your Social Security benefit. Okay. Well, if you're married filing jointly and your income's above a couple $100,000, okay, they take out $259 a month. Okay. And then from 266,000, they take 370 a month out. So, and I'll say it this way, people with higher incomes pay a hell of a lot more taxes and they get caught in some of the loopholes as well too, right? There's a lot of surtaxes that are built into our code for the Affordable Care Act. Who do you think's paying for that? Higher income people are. So, no matter what AOC or Bernie is saying out there on the campaign trail, and I'm sorry if that offends anybody, but it's ridiculous. The top 5% of income earners in the United States basically pay the taxes for everybody. So wake up.
Again, the goal, maximize income, minimize taxes. However, not paying attention to proactive planning. It just happens that wealthier people end up making costlier mistakes or oversights. And that's where the benefit of an experienced, qualified professional can pay off significantly, ladies and gentlemen, both in the financial freedom and confidence and in the actual monetary values. So pick up the phone, give Chris McIntire a call. Chris, it's been a great program, fast moving. We've been catching up. It's been a couple weeks since I've seen you, so it's good to see you, buddy, but kind of all over the place on many topics today. But it was a good show, good content, good value. And once again, Chris, most people, most savers and investors have been proactive and done a good job in a couple of the critical areas. But if there's concern about taxes, about inflation, about healthcare, about impactful positive legacy, like those are the areas that are often not included, have been overlooked, and not addressed. And that's why having that game plan for retirement, bringing all of those pieces together, ladies and gentlemen, so important. Give Chris McIntire a call, 419-332-0532, 419-332-0532. Get your game plan for retirement put together. Chris, once again, good seeing you, good catching up. Great program as always.
Yep. Thanks, buddy. Good to see you. Thanks, everybody, for listening today, and God bless America.
Tune into Chris McIntire's full radio program and visit McIntireRetirementServices.com for many additional valuable resources, including other great episodes of Game Plan for Retirement with Chris McIntire. Be sure to subscribe.
The content of this radio show is provided for informational purposes only and is not a solicitation or recommendation of any investment strategy. You are encouraged to seek investment, tax, or legal advice from an independent professional advisor. Any investments and/or investment strategies mentioned involve risk, including the possible loss of principal. Advisory services offered through Brookstone Capital Management, a registered investment advisor.
Fiduciary duty extends solely to investment advisory advice and does not extend to other activities such as insurance or broker-dealer services. Advisory clients are charged a quarterly fee for assets under management, while insurance products pay a commission, which may result in a conflict of interest regarding compensation.